Hello and welcome to the first episode of the StoneX Australian Cattle and Beef Market Report. Each fortnight, we'll discuss and look at the key dynamics, drivers and trends of the Australian cattle and beef market, ensuring that as a listener, you have the up-to-date details and insights to inform decision making. My name is Ripley Atkinson, and I'm the Australian Livestock and Commodities Manager for StoneX based in Sydney, where we're developing risk management tools for the Australian beef industry to help the sector manage market and price volatility with our Australian cattle swap. We're brought to you by StoneX Group, a Nasdaq-listed global financial services network with 100 years of experience in global commodity markets. To kick off the podcast, we're fortunate to have on to chat with Ryan Turner, Regional Director for Meats and Livestock US, based in Kansas City, Missouri. But before I do, remember that the trading of derivatives such as futures, options and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. G'day Ryan, great to have you on. Can you share with us a little bit about yourself, your time and your role at StoneX, and what the US Meats and Livestock Desk and the team does?
Hey, Ripley. Yeah, thanks for having us on. Appreciate the opportunity. So I've been with StoneX for about 25 years. That entire time I have spent in the commercial risk management space in livestock and grains. Our desk in Kansas City will work with commercial entities, helping them manage their price risk using futures, options, derivatives, over-the-counter swaps, consulting and advisory services we provide as well. Our customer base spans a pretty broad network. We've got clients from production, so cattle producers, cow-calf operators, ranchers, through the system to feed yard operators, feedlots across Kansas, Nebraska, Texas primarily. We also work in the multi-species space. So we've got vertically integrated hog producers, poultry processors, et cetera, that we spend a lot of time with, helping them manage their day-to-day price risks, like you talked about on your end. With the volatility in the marketplace today, they need a set of tools and products to use, and we help provide that.
A pretty diverse business you guys have got going on, and obviously today looking specifically at cattle. Can you give us just a really short snapshot of what that means across, in essence, the packer, feed yards and rancher end, and what offerings you're providing to the US beef industry in risk management and how that sort of looks?
Yeah, so right now, our service offering starts with a very high-touch consultative approach where we really get to know the customer's business, and then from there we can tailor risk management strategies that fit each individual customer. And each individual customer is going to have a different risk profile, a different tolerance for risks, and so there is no one size fits all approach. We really customize the solution for the client. And like I said earlier, we're going to use all of the tools available. That includes futures and options. That includes over-the-counter swaps. That might be structured products such as accumulating swaps, et cetera. It also might be in the retail space where we have clients in the beef production, beef processing, even all the way down to retail consumption. It might be using the custom meat swap offering where we offer forward fixed swaps or forward fixed price contracts on actual individual cuts of beef and pork. So we're going to use all the tools available. Yeah.
No, it's really interesting, and I think it's something the Australian beef industry can learn a lot from, and I suppose learning a lot from and looking a lot at has Australia's been looking at the US for the best part of, I'd say, 3 years. And the question we're constantly throwing around and asking is whether that US herd is rebuilding or when it's coming. Can you give us Aussie listeners an update on where that's at? Is it happening? Can we expect it in the US spring? What's the situation there?
Yeah, I would say that on that specifically, obviously we're just in a really really tight supply scenario. Um, I would say specifically to herd rebuilding, if we are, it is just in the very early stages beginning. We're not seeing any type of widespread herd rebuilding yet. I think there's a few, pieces of data out there that would maybe back that up. Start with cow slaughter. If you look at cow slaughter in 2024, just this past year, cow slaughter was down about 19% versus the prior year. I think some of that is holding animals back because we're trying to rebuild numbers. I think some of that is just because the animals aren't there. We really made a hard run processing cows in 22 and 23, and so the numbers just aren't there. The other thing you can look at is heifers on feed. We had a cattle on feed report from the USDA here last week. Cattle on feed heifers, I think we're at about 40 to 41% of total on feed, which is down 3%. Yeah, it is. It is, and we looked back, the last time we had a big herd rebuild was kind of that 2014, 15, a little bit into 16. That was the last time we had a big U.S. herd rebuilding. And at that time, heifers on feed as a percent of total were closer to 30%. And so I think if you want to use that as some, a barometer for are we rebuilding or not, that number probably needs to be below 35% before you can really say, hey, we're seeing the U.S. rebuild the herd. And another thing or another point to on that topic is if you look, we have actually this Friday we have a annual cattle inventory report from the USDA. The average trade guess for beef replacement heifers is actually up 1.3%. So that tells me that we are getting started. We are getting started with a herd rebuild, but like I said earlier, it's not. It's just not at any type of widespread pace yet.
And just in a snapshot, similar to you guys, we always like talking the weather and aware that you're in winter. How are things seasonally in your major cattle producing regions? What's it looking like? Is it improving? I mean, admittedly, winter's obviously a difficult one sometimes, but how are things?
Yeah, so if you look at what I would call the major Western cattle growing regions or cattle producing regions, the ranch lands, we're definitely better from a moisture profile perspective than we have been the last 3 to 4 years. But even with that, U.S. drought monitor maps or National Weather Service drought monitor maps have a lot of that region still in what they call kind of a moderate to light type of a drought scenario. So it's better, but it's still not perfect. We're not in a abundance of moisture. There is moisture out there. Grasslands this spring should be better than what we've seen in the last 3 to 4 years, especially. But it's still dry in parts of that region.
Time will tell. I think.
Yeah, it will. And we have had, like I said, we have had more moisture, so we're hopeful. And we are, I think I'm not a meteorologist and here, so don't quote me on this, but I do think we're transitioning into a weak La Nina, which I think should help in some of that as well, bringing more moisture to our region.
It'll be an interesting one, and I know a lot of the Australian market will be keeping a close eye on it. And I think it's a good segue into, we're talking weather and we're talking where the rebuild's at and what those dynamics are. And that obviously leads us to price. And anyone that's been keeping somewhat of an eye on the first month of the cash and futures markets for you guys in the US, to put it plainly, it's started red hot. Can you give us a bit of an update on that? We've seen fed cattle over $2 a pound, the CME futures up to sort of 275, 280. What's going on there?
Yeah, we've definitely started the year on fire, as you call it, and you've got front month Fed live cattle futures, all the way up to, near 208. The cash cattle markets have really been the leader. Cash cattle last week traded around 202. This week there was some, or actually just today, there was some light volume trade in the South, Kansas, Texas at 210. So the market has gone parabolic, and I think some of what's driving that is, as we all sat through last year thinking, okay, tight supply, prices are going to rally. And we did to some extent, but we really never got into what I would call what we're seeing today, which is where the market's just gone off the rails, so to speak. I think the piece that is different is, one, the supply side is definitely catching up to us. The other thing, Ripley, is demand. Demand here in the domestic U.S. has been extraordinarily strong for beef, and I've got a couple of statistics I'll throw out that kind of back that up and support that. The boxed beef cutout value, the choice boxed beef cutout value here in the U.S. today is reported at $3.32 a pound, $332 a hundredweight. That's 11% higher than a year ago, right? So price is up 11%. Demand, year on year. So production is also up. Beef production higher, imports higher, exports down. So total net availability of beef is actually larger right now than it was a year ago at this time, and prices are still up 11%. That's not supply. Yeah, that's not a supply situation. That's demand. And so you've got this massive demand pull that I think has surprised some people and has surprised the market. It's surprised a lot of us analysts. And so the job of the market right now feels to me like we're into a demand rationing mode, right? We can only do so much via price to encourage supply, but price can certainly put a halt to demand. And I think that's what the market here is trying to do right now. We're trying to take the market pricing high enough, unfortunately, to make people stop using the product.
It's a pretty good problem to have, and I think it points to the machine that is the US beef consumer. You're pointing those figures out. It's pretty amazing to see both production and price up, yet it still continues, that cutout value still continues to kick along. It's it does show that the standing of beef in the US consumer's mind, and it's pretty impressive.
Yeah. Yep. It sure is.
I think you make a good point there, and I wouldn't mind you sort of expanding on that. We've spoken cattle prices. We're now looking at potentially at some point you guys purely just running out of cattle. Where are the supermarkets and others in the beef supply chain, or how are they going to absorb some of those costs? Is it going to be passed on to the consumer? Clearly, you've said prices are up 11% on that cutout. They obviously have been passed along, but how is that looking for this year, like looking forwards the next 6 to 12 months? And obviously you made that really good point about price pulling up that demand to slow it a little bit. What are your thoughts looking forwards?
Yeah, so I think the first thing that will happen is I think we will squeeze retail margins. So retail margins have been really good here through 2024 on beef. So the beef case, the beef product listings at restaurants, et cetera, I think margins were pretty good there. So the first thing we'll do is hit those margins. I think then once that impact is felt by the retail sector, I do think then they will start to ratchet prices higher, passing them on to the consumer. So I think the consumer can expect to see higher pricing on beef as we go through 2025. And we're already seeing some of that. And I think, the benefit for you and the producers in Australia is that we're going to continue to have a massive pull for lean beef, and that's going to be in the form of primarily lean 90s coming over from your part of the world, and those prices have stayed strong. I think beef 90s are around 360 a pound a day here in the U.S. That's fresh USDA 90% trim. I think beef 50s are back up to over $1.15 a pound. 3-4 months ago, the 50s market was down closer to 50 to 60 cents a pound. So we've seen the wholesale prices start to ratchet higher again, and I think that will in due time. I just you don't know how long it takes, but in due time, I think that will get passed on through to retail.
Yeah, it's an interesting one, and a lot of the Australian market is pretty keen to see how it's going to unravel. But I think what the insights you've given today is just unreal, and really appreciate you coming on to join us and talk through it.
Yeah, no problem. Anytime. Happy to talk through it. And there are other wild cards at play. You've got right now an administration change in the U.S. Here in the last week and a half that certainly could impact international trade and commodity pricing as we go through 2025. So there are other things at play, but right now today, I think we covered the highlights, and market's just really strong here in the U.S.
And Ryan, just on that administration change that has happened since last Monday, it doesn't, you've just mentioned futures and cash markets performing quite strongly in the first month of the year. It doesn't seemingly look like it's spooked those markets so far. Admittedly, we're only 10 days in, but what have you got any thoughts on that? Is there anything worth digging into a little bit more there in relation to trade and potential implications with two key trading partners, Mexico and Canada?
Yeah, I think the big question that's still, out there, and I suspect we'll have greater clarity in the next week, I think, is obviously around tariffs and how that whole thing plays out, which, we just don't know the answers to that. But that's something that is, as you're, looking at market analytics for this year, that's certainly going to be something that could be impactful. We just don't know what those look like today.
It'll be an interesting one. And I just had a couple of things from the Australian perspective, which I thought were worth mentioning now that we're pretty much at the end of the month, which seems to have flown by in a busy start to the year. I think, Ryan, in Australia, we sell 60, 70, 80,000 weaners in sort of the first 2 to 3 weeks of January each year. And we really, this year particularly, saw a major influence from northern producers north of the border with Victoria into areas of southern Queensland. We're taking quite a lot of cattle to be backgrounded, which, we'll expect to see on a 4, 6, 8 month trade, coming out at the back end of the year, which means there will be good supply of those cattle in that major northern region of the eastern seaboard. And feedlots were the other ones operating quite hard on those well-bred, good quality calves. And I think that was a real theme. You typically see the demand balance between those southern grass-fed buyers and backgrounders be quite even with the north, but considering the season, the south, east and South Australia, large parts of Victoria have had, and southern New South Wales over the past 12 months, the demand just wasn't as strong there this year, but the north certainly put a floor in it. The feedlots and those backgrounders for cattle to head north of the border were quite active. But we saw the market open strongly, and now we're seeing we saw it open quite strongly in the first fortnight, and it's pulled up quite quickly in the second half. The supply and demand equilibrium sort of easing its way back towards balance, and it may suggest it got a little bit overheated in the first fortnight. Flatbacks in Queensland up to $4, highest price in 3 years. It was just a really interesting way for the year to start, but conversely, it's pulled back just as quickly, and with some hot and dry weather over the past couple of weeks, and that extending for large cattle areas in the eastern seaboard, New South Wales into Queensland, across into WA as well. That will be interesting to see if the rain doesn't eventuate. There may be some pressure on pricing here for the next little while. School holidays ending, producers returning from holidays, plenty of paddock cattle flowing. It'll make for an interesting couple of weeks with not a lot of rain forecast. That's been something that's probably surprised the market, is how quickly it rose. But then at the same time, it got that peak there in sort of the first 10 days of Jan and has pulled back pretty quickly. So they're just a couple of things I thought were worth discussing for us for this first episode.
I guess from our end, we hope you guys continue to have a robust supply coming at us, because we're going to need it.
Look, I don't think cattle numbers and the supply of beef is going to be too much of a worry, and that's something that I am going to dig into on the next episode of this podcast, is the StoneX 2025 Australian cattle market outlook, and look at where we're expecting to see production volumes and exports, and obviously a large part of that and a contingent of that product we produce and send overseas will be ending up with you guys, which is obviously, as you point out, quite important for the next few years.
Absolutely right. Well, that sounds good, Rip. I'm glad you had me on, man. I appreciate it.
No, thank you. It's really interesting, I think, for the Australian listeners to get some insights from you guys, and we really appreciate you taking the time.
Anytime.
Yep. Thanks, Ryan.
All right, thank you.
Look, to wrap up, questions are always welcome. So if this has raised any questions for our listeners and you want something answered on the market, send me an email at ripley.atkinson@stonex.com, or record a voice note of yourself, where you're from, and the question, and we'll answer it on the next episode. As I mentioned with Ryan, looking forwards to unpacking that 2025 StoneX cattle market outlook for Australia, with our forecasts on those key production metrics: herd, slaughter, carcass weights, exports, live exports, and my views on the market. So tune in for that, and make sure you hit subscribe on your podcast platform. We'll be having regular updates on a fortnightly basis through this podcast. Make sure you subscribe to it, share it with your friends, and looking forwards to plenty of engagement from everyone and plenty of questions. Thanks for listening to us, and we will see you next time.